Brent oil just ripped a hole in the chart. A near 7% single-day collapse on a geopolitical headline that landed like a bomb. The price sliced through not one but two established support zones, and right now it's hovering at 93.65, staring down at the last line of defense before the 2024 range floor opens up. Most traders are looking at this and feeling either sheer panic or the urge to blindly fade the move. Both are wrong. There is one precise danger zone and one hidden opportunity today, and I'm going to show you both. Stay until the end. I'm giving out 3 exact entry and exit levels, complete with stop-loss logic and risk-reward ratios you can execute immediately. Here's the instant market verdict. The session bias is sell on rallies until proven otherwise. The daily chart flipped to a strong sell, the 4-hour is a strong sell, and even the 1-hour trend is aggressively lower. That is not a dip buying environment yet. The one invalidation level that would prove this bias completely wrong and signal that a trap is being sprung is 96.69. Write this number down. If Brent closes above 96.69 on the 4-hour chart, this entire breakdown becomes a massive bear trap, and we pivot to a long back toward 99.39 and then 100.05. Until that happens, every bounce is suspect. The structure is fragile, and the moving average alignment is a graveyard for bulls. Now let's go deep into the technical picture. I want you to visualize the weekly chart because that's where the real fight is. The weekly trend is still a buy, and the monthly trend is a strong buy. That tells you we are inside a secular uptrend that has not been violated yet. The 50-week moving average, which sits at 99.08, is now acting as overhead resistance, and the 100-week moving average down at 91.05 is the critical floor. The weekly MACD is beginning to roll, but it's still above zero. So the larger time frame is sending a clear message. This is a sharp correction within a bull market unless 91.05 breaks. Now drop down to the daily. Here the story gets dangerous. The daily trend just flipped to a strong sell. The price is buried below the 20-day moving average at 102.45, the 50-day at 99.08, and even the 10-day at 101.29. The 5-day exponential average is already sloping violently lower at 98.78. The daily MACD is printing negative 1.13 and accelerating downward with no bullish divergence in sight. The RSI is at 39, so we are not even deeply oversold yet. That means selling momentum has room to continue. Most traders think a 7% drop means you blindly buy, but oversold can stay oversold when the driver is a geopolitical narrative shift. Now the 4-hour chart. The moving averages are aligned in a perfect bearish waterfall. The MA20 is coming in around 102, the MA60 around 105, and the 200 period on the 4-hour is near 96 to 97. Exactly the zone that was support and is now massive resistance. The daily support and resistance numbers I gave you earlier are 97.36 and 96.69 as former supports. They are broken, so they flip to resistance. The new supports below are 91.05, which is the 100-week moving average and a psychological magnet, and then 89.00 as a round number extension. The ultimate downside target from the range breakdown sits near 82.66, which is the 200-week moving average. That's the doomsday scenario. The 1-hour chart is already consolidating above 93, but there's no reversal structure yet, just a tiny pause. What most traders miss here is that the selling volume on the collapse was colossal. This wasn't a liquidity grab. This was a repricing of geopolitical risk premium. The next signal that changes everything will be whether the price can push back above 95.50 on the 60-minute chart and hold there. If it does, the short-term momentum begins to neutralize. Now let's weave in the cross-asset link. Gold is sitting there relatively calm, barely reacting to the same geopolitical news. That tells you this oil move is not a broad risk-off event. It's a supply-side de-escalation premium being stripped out. The US-Iran deal whispers mean potential barrels coming back online, and that is why black gold is bleeding while gold is stable. This divergence is crucial. If we see gold start to break down as well in sympathy, that would confirm a deeper risk asset unwind and take Brent toward 82. But if gold holds firm, it signals that macro fear is not driving this. It's purely an oil-specific supply shock unwinding. That would favor a stabilization bounce once the initial panic is absorbed. So keep an eye on XAU or USD. Also, the US dollar has been firming, which adds another headwind for commodities. Brent does not like a strong dollar, and with the DXY pushing higher, the path of least resistance remains lower until the dollar shows exhaustion, now the fundamental driver. The last 24 hours core news is simple. Oil tumbled nearly 7% as the US and Iran are seen moving closer to some form of nuclear deal that could ease sanctions and release Iranian barrels onto the market. That headline has flipped the supply narrative. For weeks we priced in a tight physical market and geopolitical risk premium from the Middle East. Now the market is repricing the possibility that those barrels come back. This is a negotiation headline, not a sign deal, so we are in a rumor mill environment, which means violent two-way moves. The 1 to 2 week directional lean is cautiously lower as long as 96.69 caps. The event that would invalidate this bearish lean would be a clear breakdown in talks, a statement that negotiations have stalled, or a sudden supply disruption elsewhere. In that scenario, Brent could snap back above 96.69 and retest the 100 handle. Until then, we trade the breakdown. Alright, here's where most people click away. But this is where money is made. I'm going to give you 3 trade setups, each built for different risk appetites. The first is the sniper approach for those who wait for confirmation. And highest probability strategy 1, the sniper, conservative. We want a short entry on a pullback to newly established resistance. The level is 96.69, which is broken support turned resistance. Wait for a 4-hour candle close below 96.69 to confirm that the zone is still capping. Then, on the next 1-hour push into the 96.00 to 96.60 resistance zone, look for a bearish rejection candle, a shooting star or a solid bearish engulfing on the 1-hour chart. Entry at the break of that rejection candle's low, ideally around 95.80. Stop loss goes at 97.20, just above the resistance cluster and the 4-hour 200 period moving average. The logic: if price reclaims above 97, the breakdown loses credibility. Target 1 is 93.00, which is the current consolidation low. Target 2 is 91.05, the 100-week moving average and major support. Risk-reward on this setup is about 1 to 2.8, depending on fill. This trade is voided if Brent spikes above 96.69 on a 4-hour close before you get an entry, because that would shift the structure. Strategy 2, the active trader, standard. This is for those who want to play the potential mean reversion bounce off the weekly structure support. The thesis: 91.05 is the last stand. We wait for a washout down toward that level, ideally a spike to 91.20 to 91.00 area with a sharp intraday reversal candle on the 1-hour chart. Entry trigger is a 1-hour close above 92.00 after the wick low has been formed, confirming a rejection. Stop loss goes at 90.70, below the 91.05 magnet and below any recent spike low. The reasoning: if 91.05 fails intraday, the next stop is the 89 zone, and we don't want to be long. Target 1 is 94.50, which is a minor resistance level and the top of the current 1-hour range. Target 2 is 96.00, into the resistance zone. Once target 1 is hit, move stop to break even and trail with a 20-pip buffer on the 1-hour candles. This is a counter-trend bounce play, so risk management is everything. Let's see how aligned we are. Type your Brent range for tomorrow in the comments right now. I want to see where you think we trade between, say, 90 and 97. I'm reading them. Strategy 3, the Aggressor, high risk. This is for traders who are comfortable catching a falling knife with a very tight leash. The setup: momentum short continuation on a break of the Asian session low. Right now that low is around 93.20. If price breaks below 93.20 with a 1-hour candle close, we short immediately at market, expecting a flush toward 91.05. Stop loss at 94.50, tied above the last lower high. Target 1 is 91.20. Target 2 is 89.00. This is a high-speed trade where slippage is real, and news can reverse it in seconds. Only for those who know how to lose small and manage risk aggressively. If Brent rips above 94.50 within minutes, you're out. No questions asked. Risk management pulse, 30 seconds. Never risk more than 1 to 2% of your account per trade. No positions through high-impact news like U.S. inventory data or sudden deal headlines. Stops are non-negotiable. Crude oil can gap violently. Size accordingly. So let's close this out. The most critical level for the next session is 91.05. That is the floor that separates a healthy correction from a structural breakdown that targets 82.66. Tomorrow I'll be watching the US session open and any further comments from the Iran deal negotiators. The energy market is headline-driven right now, and each tweet can move price 3% in minutes. If you want the full breakdown on how Bitcoin and the S&P are diverging and what it means for risk assets, that video is live now. Check the end screen. Smash like if this analysis gave you a clear plan. Subscribe and hit the bell for daily coverage of 8 key assets. I'll see you in the next one.